Friends, we are in the process of containing COVID-19 and the curve is being flattened now. We are almost there. Life and livelihood are like two sides of a coin to a government. Both center and state governments are taking enough steps to ensure that the lives of the citizens are being protected well. For livelihood, there have been several measures by central government, state government as well as Reserve Bank of India. Reserve Bank of India on 27th March announced, that's the first announcement, that there will be a loan moratorium for 3 months for all kinds of loans, including term loan, working capital, housing loan, and all personal type of personal loans, P segment loans by commercial banks, private banks, as well as NBFCs. Also, Reserve Bank has reduced the CRR, cash reserve ratio, repo rates, reserve repo rates, thereby allowing banks to have more funds for lending it to the public. On 17th April 2020, Reserve Bank has come out with the next set of announcements whereby the NPA classification, non-performing asset classification has been redefined, and there would be a standstill clause that would be applicable for 3 months time. Meaning, on 28th February, whatever is the status, the same status has to be continued till further instructions for the next 3 months time. Therefore, the business owners need not worry that their account would be classified as NPA and denied of credits on a further basis in future dates. That's first announcement. Then the second announcement is, in order to infuse a lot of liquidity into the banking system, the Reserve Bank of India has announced some booster measures. The first one is to infuse funds to the refinance agencies like NABARD, SIDBI and National Housing Bank. 50,000 crores have been earmarked for the same. 25,000 crores has been earmarked for NABARD, which would help agriculture sector in a big way. 15,000 crores to SIDBI, which will help MSME in a big way, and also 10,000 crores to NHB, National Housing Bank, which will help the housing sector in particular. Reserve Bank of India has reduced the liquidity coverage ratio to all commercial scheduled commercial banks from 100% to 80%. This will release a portion of liquidity to the banking system. Similarly, reverse repo has been reduced by 25 basic points from the current level of 4% to 3.75%. It is pertinent to note that even in 27th March announcement, it was reduced from 4.9 to 4%. These things will help a lot for commercial banks and private banks to have more funds in their liquidity system. Also, there is a prevailing system in the banking industry that whenever the state governments are facing liquidity issue, they used to lend money in the form of ways and means advances. Now, many of the states in the country are facing liquidity crunch. So, the Reserve Bank of India has thought it prudent to increase the WMA by 60%. This will help many state governments to get money from Reserve Bank of India as a loan, which would be repaid on a later date. And Reserve Bank has announced that no banks need to declare any dividends, thereby ensuring that they have adequate funds for liquidity purpose. Friends, it is high time for the business owners and industrialists to approach their bankers to arrive at the required credit limits and drawing power. Convince your banker, go and present your working capital requirements and get the proper funds. You will be getting the eligible funds because now the bankers are flushed with funds, and Reserve Bank and central government has already instructed the bank managers and the decision makers in the bank to lend the business owners the required eligible amount. Therefore, it's very high time that you need to work on this on a priority basis and approach the banker before it is too late. Wishing everyone a great recovery from COVID-19, and I am sure we will be back to